Hey everyone, remember how we talking about this holiday season and how we need to buy our stuff early due to a supply chain issue?
Yup, I need to start soon. Why do you bring it up?
Well, we're going to talk about what we think this Q4 is going to go and what should we do as an investor.
Cool, and let's talk about Boeing too. We heard some great news from China, which is potentially huge for Boeing stocks to take off. No puns intended.
So this Tuesday we got the retail sales number back from October, beating last October of zero point 0.8 and forecast of 1.5. Excluding auto of 1.7, also beating estimate of 1. We saw a big increase in especially for online shopping, up 4% and up 10.2% year over year.
Wait, how did online shopping grow so much year over year? Last October, people should be in lockdown, which means shopping would mostly be done at home. So this is likely means that people start their holiday shopping early, right?
That's a great point. I'm wondering the same thing. So I asked around and I got two different opinions. First is people think that around Christmas time, inventory and shipping will be super busy, and some order might not make it in time. So they're ordering online ahead of time.
Oh, so if that's the case, November and December's retail sales growth will actually slow down.
Exactly. And second case, since inflation is high this year, so the overall purchase volume and total dollar amount is higher. Plus, last year we were under the pressure of the pandemic, suppressing a lot of shopping in general. Due to those two reasons, we're seeing a massive growth in retail sales.
If it is a second case, the November and December will continue October retail sales trend and go even higher. We won't see a slowdown in November and December for sales.
That's right. Personally, from the numbers and guidance from flagship retailers, we will likely see retail sales grow higher in November and slow down in December.
I basically agree with that. And I will also add that we can expect this fourth quarter to be a good quarter for retail. But Q1 of 2022, I expect a bigger slowdown for retail sector.
If you are holding retail stocks like Costco, Target, or Walmart, you should expect their Q4 sales to be good. I'm not saying their stock won't drop.
Right, because if people are expecting Q1 sales to drop, whether in speed or actually drop in revenue, then they will sell on news once Q4 earnings are out.
Exactly. In fact, that's what I would do if I'm holding retail sector.
I saw something interesting and want to quickly cover it. So Goldman expect the S&P 500 to hit 5,100 by the end of 2022. So about 8.5% up from where we at right now. If you buy SPY share now, you can expect an 8.5% return by the end of next year, at least according to Goldman Sachs.
So, why do Goldman think so? Any basis?
Goldman thinks that if we don't count those big tech mega caps, the forward PE of S&P 500 is around 18. This means that even if the stock prices grow another 10% next year, the PE would be around 20, which is not overvalued since for S&P, a PE is generally reasonable between 18 and 22.
What if you include the mega caps?
Well, then the forward PE is likely sitting around 20 now. But what Goldman is saying is that the small caps still have rooms to grow and more rooms than your Apples, Amazon, and Google. What do you think?
I mean, knowing Goldman, they'll probably say something else by February. But we can at least get one perspective. I'll keep that in mind. Goldman's actually not always wrong this year.
So Boeing stock's price has been on a nice uptrend in the recent weeks.
Oh yeah, now we have over 70% vaccination rate and people are flying everywhere. Delta Airlines just recently announced that their international bookings jumped by 450% in the first 6 weeks since the US reopened its international borders to travelers from certain countries.
Sounds like the airline's post-pandemic recovery is looking pretty good. And that should be bullish for the airplane's demand.
On Monday this week, Boeing shares jumped 5% after news on China being satisfied with Boeing 737 MAX proposed changes and is getting close to lifting the flight ban in Chinese skies.
I still remember Boeing was traded at more than $400 per share in 2019. The stock has fallen about 50% since then. Is it a buy now?
So, Boeing is still a key supplier in the aviation space, and I don't think anyone can replace Boeing and Airbus anytime soon. Air travel is a vital industry, and Boeing is virtually guaranteed to see demand for its products. But I feel like there's still a long road to recovery from the 737 MAX disaster.
Yep. Airbus took a good amount of market share since the crisis, and now they are possessing roughly about 62% of the backlog aircraft orders as of the end of June.
As of Boeing's 2021 second quarter, its total commercial backlog of 285 billion remains well below the 390 billion it had in mid 2019. It's not terrible, but it's still down 30% since then.
Here's some balance sheet stuff. At the beginning of 2019, Boeing carried just about 14.7 billion in total debt. And guess how much they're at right now? 64 billion. This is a buttload of debt. And this could potentially prevent management from buying back shares or reinstating its dividends payment for the future.
Well, but if you look on the bright side, once those news come, the stock price will get carried hard. But one thing we both agreed is that Boeing has a history of great returns, and they're not going anywhere. And we have to admit, they have to heal up a little bit. And that's going to, like recovery always takes time.
Yeah, so I don't think investors need to be in any rush to board just yet. I feel like the fundamental of the business have changed since the pandemic. But yeah, like you said, it takes time, probably a couple of years to get back on track.
Oh, to look on the bright side, Boeing appears to have delivered the majority of the 737s it has built in 2021. I forgot what the number was, but you get the idea. The 737 MAX delivery rate should improve bigly in 2022. Top customer Southwest Airlines alone has ordered 72 for delivery next year, and about 200 737 MAX jets for United, Ryanair, and Alaska.
And we should expect that approval to come in the next few months from China to let the bird flights again. But as is with China, some of the third world countries still battling COVID probably won't look into add new jets next year.
Analysts forecast that Boeing will return to profitability this year, but before they pay down a chunk of its debt and rebuild its backlog. I think you can make more money elsewhere.
I completely agree. And we are likely to expect some volatility in the next few months. You can grab some calls and bet on the big orders or Chinese new maybe.
The stock gapped up on Monday this week, but also dropped 5% on Friday. It looks like smart money is just trying to accumulate shares by slashing the short term stop losses. If the stock continues to pull back, I'm hoping to grab some shares in the sub 200s. If we can break the resistance level around 228 to 231, the bird might be able to fly a little higher.
Well, completely agree. But let's quickly go over the overall market for the week. Nasdaq and the S&P 500 is up roughly about 30% so far this year. I'm not really sure if we are still in the FOMO, fear of missing out, or FONGO, fear of not getting out right now. All I know is every dips is being bought up instantly. The biggest pullback this year, if I remember correctly, it was only 5%.
That's right. Just some funny info that I like to share. The S&P 500 now has recorded 66 record high daily closes in 2021, which put this year's the second most record high hits over the last half century since 1995.
Yep, I don't think this bull market is running out of time, but it may lose some steam.
Looking at the S&P 500, we closed the week flat. Investors still fear the inflation number, ongoing supply chain issues, and a rise in COVID-19 in some regions.
Well, growth stocks are still outperforming value stocks, and with the 10-year yield bond dropping about 3% on Friday, that helped lift the Nasdaq to another record close for the week.
Yep, both Amazon and Apple are doing great this week. The energy sector got dragged down by oil prices after China and the US discussed releasing strategic reserves, and US inventories finally rose for the first time in 5 weeks. Financials were also pretty weak this week.
Remember, trader, the stock market is closed for Thanksgiving Day next Thursday, so relax and stop staring at the monitor for the day. We wish you and your family a happy Thanksgiving. Thank you for watching. If you find this video helpful, Feel free to give us a like and subscribe for more content like this.